This is a video for instruction 123, Management Accounts Review and Preparation. In this video, we're looking primarily at the ledger review process. The ledger review process doesn't have to be done as part of a management report, but that's where we most commonly do it. In this particular example, we are going to be working on B4 Networks Inc., which is a Canadian Ontario client, and this is for the October 2017 month end. B4 Networks is a full service client where we do the bookkeeping. I'm just going to run briefly through each of the steps in the ledger review process and then demonstrate that for you with respect to this client. When we're doing a ledger review or anything like this, one of the most useful reports we have is the reconciliations report. Sorry, before I get to that, let's just talk about the introduction here. It's really not practical to do a ledger review with a client that does not have mostly up-to-date bank accounts as far as coding is concerned. The best way to find out how up-to-date they are is to go to Accounts, Bank Accounts, and click on the Uncoded Statement Lines button here. This always defaults to last month, which is, for a monthly accounting client or monthly bookkeeping client, the best place to look. So here you can see by just scrolling through this report that we have no outstanding transactions, which is fantastic. We can actually go on. Now, just because they have outstanding transactions doesn't mean we should stop. It really depends on how extensive they are. In some cases, you can look at the transactions and go, they could be transfers. I can clear those now, in which case you might just go ahead and do that. Other times, there might be transactions that the bookkeeper is waiting to get information on, and we've decided to hold off. So again, just look at what's outstanding and decide, do I need to stop, or can I progress forward? If there's only a handful of transactions, you're probably going to progress forward. If we aren't doing the bookkeeping and you can't contact our bookkeeper to find out what's going on, you may just make a list or add that to your list of issues and questions. So for example, you might say there were still 3 small transactions in the Meridian Mastercard business account for coding, for example. Okay, so we've passed this introductory step here. We're now ready to work on to the actual ledger review itself. So the first thing we're going to look at here is this reconciliations report. Under Reports, All Reports, Accounting, Reconciliation Reports. And I recommend you star any of these reports you use on a regular basis on all your clients, because that way it's actually going to show up in the menu of reports itself. The reconciliation reports is a great multifaceted report. It's a little unreliable. You could be working away in this, go to the next page, and it will fail, and you go back to the reports menu, and you've got to run it again, which is a bit of a pain. Its standard default is to report based on the last year end. So when you're doing monthly reports, you do have to tell it which date you're working with. So we'll just do that on the front page. Now, we don't worry about the trial balance. We actually go straight on to the next page. And here you can click on the link to see the next page. So first thing we're looking for in accounts receivable is we're looking for any funny credits. We can see here that we've got a couple of credits that are more than 3 months old. That's probably the big one. If there is a large credit and they've got more recent transactions, we may want to suggest that they allocate that credit off. So again here, this is probably something we're going to include on the list of open issues or questions to the bookkeeper or the client, particularly in this case for Tree Amigos Landscaping. There's a big credit there and 2 more recent transactions. Should we apply the credit against those transactions? Don't do anything unless it's very, 95% certain that's the right answer. We're better off to go back to the client and say, hey, we noticed this. Would you like us to do this for you? Here also for West Lincoln Farms, we see a small credit, and we also have a slightly outstanding balance the month before. So again, chances are that credit should be applied here. In months where there's a credit with nothing, then we should have seen this come through over previous months. We may want to raise a question. You want to look into it to see, well, what's the credit from? So we click up here, show invoices, and we can see the actual invoices that make up the item. But we might want to look into here and say, what's the credit from? Maybe we click into it and have a quick look at it. That's a credit note that was issued. There's no more information on this. It doesn't look like we've billed the client recently. We can go and look at the client history to see, what have we done since then. We actually are billing the client recently here. So again, this might be a good thing to remind the client that we actually do have a credit that needs to be applied to the next invoice. They'd probably just go and send these invoices out without thinking, hey, I've got a credit to apply. Or the client might reply by saying, you know what, that credit actually needs to be removed because it's incorrect. So again, this is something here that we'd probably include in our list of questions for the client. That was dentistry in the village, because we can see he has more recent transactions, but he still hasn't applied the credit, and we'd want to know why. So again, the objective here is that you're looking for questions, you're looking for things that don't feel right. Why is this credit here? And you're building a list of questions to go back to the client with. You're looking for receivables that are stale as well, so particularly in this 3 months and older category. And, we can see here we've got eShine Car Care. We have an old invoice. It's fairly small, might not be worth worrying about. But again, once we see things starting to hit this category, we might want to remind the client that they have stale invoices 3 months plus in this particular category, and ask them if we need to consider writing off any of these items, or if he wants to refer them to debt collectors. So again here, Surex Insurance Brokers, have a look and see what's going on here. We have an agreement. Now, he might argue here that this was never completed, and therefore the revenue should be reversed. That's always good to look at. Here we can see this is an invoice raised in June. Another invoice was raised and paid in July for nothing. So chances are the June invoice is probably not valid. We might need to go back and reverse that out. So again, lots of good questions here we're going to send on our list to the client. Next, we're going to click through to aged payables. I'm not going to cover every possible issue here, but the point is you're looking for problems and you're looking for questions. Okay, we're going to go into aged payables, and we're going to look into exactly the same thing. Again, anytime we see a credit, we always want to ask, why? Do we need to apply that credit to a more recent invoice, especially once it goes past the current month? I don't usually get worried about what's in the current month. I certainly want to be looking at what's in these 2, 3 and older months. Now, a couple of things we want to look for when we're reviewing aged payables, even in the current section. So the first thing we're looking for is anything that's in this list that should we think was probably paid by a credit card or a debit card. And you only learn these as you go. You're looking for fast food restaurants. You're looking for software as a service providers where we know that they should be automatically charging those accounts by credit card. So we're looking through here to say, hey, is it reasonable that this item would not have been paid? So for example, Fido, cell phone company, most cases it's charged to a credit card. If anything's more older than current, that would scream, that seems strange. And what you do there, the best way to track those down is to look to see, have we made payments to that supplier since that bill was issued? And maybe we've actually recorded it twice. Once as a bill, not paid, and once as a spend money or a second bill that was paid. So we're looking here for potential duplicate transactions, transactions where we have them as unpaid bills and yet they shouldn't be in payables because they've already been paid. We're looking for things that may be shown as an unpaid bill but were paid by the owner. So again, you're just looking here for things that are starting to creep to the right in terms of staleness, and ask, is there something we need to do to research this? If we have our own bookkeeper, you would send those questions back to the bookkeeper once you've done some basic research, and then if not, you'd send the questions off to the client. So in this case, I don't see anything serious here. SkyComp Solutions has a credit. Should we be applying that credit to the more recent bills? He would probably pick that up when he goes to pay bills, but that could be something added to the question. I do see here Canada Revenue Agency, so very unusual for us to be carrying bills to Canada Revenue Agency. It's probably penalties of an interest of some kind, so we can always look at the invoice details and look at it. He's coded it to income tax expense. He's put through an attachment. I know we paid a GST period late, so that's a result of this assessment, but it is a GST period, so I know that's actually wrong. So in this case, it's not income tax expense. You might as well go ahead and change that to be penalties. Penalties and fines deductible. It's not deductible in Canada, so it's non-deductible. And we can go ahead and update that. Now, it still hasn't been paid. Drats, and accounts are locked. Normally, for most clients, we can go and unlock. He likes his stuff not to change. I'm going to actually go and unlock this one because this is just a little internal change. And that was put through in the previous month. And I'll relock everything. The only thing you've got to be really careful of is we never want to unlock a closed financial year. So if that had been something that was recorded in the previous financial year and we had actually closed that year off and filed the returns, we never change them. We always make the change in the new year. So in that case, I would have done a credit and then another debit in order to apply, to correct that item, or I would have used a journal entry. Okay, so we're still on our aged payables report. We're looking for potential issues, things to research, things to communicate with the client about. Really the only one I'm at all interested in here is that credit there for SciComp and whether or not we need to apply that to one of these more recent payments. Other than that, everything looks fine. Now we're going to go on to look at the bank reconciliations. Now, if we have our own, if we're doing the bank the bookkeeping, then these should be fairly clean, but I do want you to look at them anyway. And there's an example there of you might be working in that reconciliation report and all of a sudden it dies on you. You've got to regenerate it. Bit of a pain in the rear end. Some of these Xero reports aren't as stable as they should be. Got to go back and redo the date. Okay, and now we're going to go to the first of the bank accounts. Now, what you're looking for here, this is a perfect reconciliation. So balance of zero equals the expected statement balance with no reconciling items. If we are doing the bookkeeping, you can assume that our bookkeeper has verified this balance. If we're doing more of a periodic review, especially if we only touch them once or twice a year, I always recommend that we ask the client for a copy of their bank statements before you start the review. This will allow you to verify that this expected statement balance, this should really have the word expected in front of it, this expected statement balance is in fact the balance according to the bank. This is one of the most common problems we find with indirect bank feeds. So this is Xero feeds that use the Yodlee system, which log into the online banking on behalf of the client and scrape the data. Is that a transaction goes through, usually it's a missed transaction or a duplicate transaction. And if no one checks this balance, it'll never get noticed or hardly ever get noticed. So when we are doing a ledger review, we will, and we know that it's not a direct feed, even direct feeds actually mess up, but much less likely. So New Zealand clients, we tend not to worry about this because we assume that the feeds are direct and they're going to work. Canadian clients, we don't yet have any direct feeds. So if we're not doing the bookkeeping and we're doing, say, a quarterly or a 6-monthly review, we should ask for bank statements so we can verify the balance here. Okay, now if there's no other reconciling items and we've verified the statement balance, you're all good. You can just move on to the next account. Okay, again, that's really good. So perfect set of reconciliations look just like this, nothing in between and everything balancing. If a statement balance says zero and we haven't got anything, any reason to investigate further, we'll move on. You want to be careful. Sometimes in the bank section, we'll have non-bank accounts like Stripe, clearing, and other things like that. That's probably something for a separate video to discuss. Now, here's an example where we'll assume for a moment that our statement balance is in fact correct, but now we have reconciling items, or in this case, outstanding items. So there's 3 types of sections that will appear here: outstanding payments, outstanding receipts, and unreconciled bank transactions. So unreconciled bank transactions would be transactions from the bank that hadn't yet cleared before this date. In some cases, they may have been cleared already, but they've been cleared to a bank statement to a transaction dated after month end. That's okay to a point. If the transaction was dated 31st of October in the bank and we had matched it to a transaction on the 1st of November, that's probably okay, especially if it's a transfer between bank accounts. It's very common to see a delay between the check account date and the credit card date when we make a payment. So we might show on the on the check account that the payment was supposed to happen on this date, but it actually happened the next day. That's usually okay. Any other unreconciled bank statement lines is generally worthy of a query to the client, because we actually do want those cleared up, especially if they're old. If they're only, the last, week or so of month end, we could probably live with that because we know he's going to fix them up. But if they go back more than a month, they've become stale, we want the client to action them. We want to ask the client and prompt them. Outstanding payments and receipts are really just one's more of a debit and one's more of a credit. Outstanding payments in a perfect world should simply be outbound payments, checks that we've written that have not yet cleared the bank account. So they should be reasonably few, and they should be reasonably recent. Now the thing with checks is they're valid for up to 6 months. So if it looks like a valid check and it's less than 6 months old, you can probably leave it. You might want to double check that we haven't recorded it twice, but certainly most checks clear within a month. So I would definitely investigate anything more than a month old, maybe even ask the client. The client's answer might be, yep, look, I sent him the check, he hasn't cashed it yet. I'm just going to wait a few more months before I approach him about it. That's fine, as long as the client's aware. Outstanding receipts tend to be a little more problematic. So these are deposits that we have told Xero that to expect, but we haven't matched off yet. So the most common scenarios here are funding receipts or bank deposits. Bank deposits may take the next day before they appear on the bank statement, and funding receipts may take up to 7 days. So this is an example of a funding receipt. We can see here was processed through Stripe. We know that it's going to take 4 to 7 days for that money to clear onto the bank statement. This transaction here is actually a fee that gets connected with this payment, and when that payment arrives, it'll actually be the net of those two numbers. So, and it's also, we can see it's in the last 7 days of the month, so that fits our expectation. We know that Stripe takes a week to clear. Some clients who have their own other merchant facilities, they may clear the next day. So again, if you have an outstanding receipt for the 20th of October and you go, well, that's unreasonable because it should clear the next day. Therefore, by the 31st of October, it should have cleared. Keep in mind that weekends are non-banking days. So you want to investigate anything here that looks unusual that you can't explain, particularly anything that's more than 1 month old. Okay. At the end of the section, you'll have gone through all the different bank accounts investigated or raised as questions, all the transactions that haven't been properly dealt with. If there are any clearing accounts or things like that, then we might want to work through those personally before you go. PayPal is another example. It's not necessarily as reliable as we'd like it to be. If they have an active PayPal account, that can get a little messy. But you want to just go through every single bank account and make sure that the reconciliation is up to date. Petty cash is another example where if there were unreconciled transactions here or outstanding transactions, we'd probably leave them because we typically deal with those at the end of the year. He's got quite a few accounts because he's setting up profit first. Okay, so that is the bank account reconciliations. If you have questions on things that you're seeing in here, either raise them for the clients or raise them for me to have a discussion with. Okay, next thing we're going to look at is the General Ledger Exceptions Report. Now this is the last page in this reconciliations report. So not the last page, second to the last page. So General Ledger Exceptions, that one there. And what you want to do, you want to double check your dates here for this report. And it does take a few seconds for it to load the report because it's actually bringing in quite a lot of transaction details. So it's going to default to the last year, which is crazy. So we're going to make this 1st of October to the 31st of October. Update that. And I did something wrong there. 1st of October. Okay, now this report's quite a useful report. It's going to give you a list of potentially suspect transactions. Now, just because it's on this list doesn't mean it's wrong. What you really want to look at is the reason. Why is this flagged as a potential? So, for example, this has a sales tax reason. So tax always means sales tax. So we want to look at this. What Xero is doing is it's saying, hey, under their code accounting, we expect there to be HST at 13%. But we've posted something here and we've used a 0% tax rate. That doesn't meet our expectations. Now, WiseSync, we know as an American company, LLC, don't have LLCs in Canada, and most American companies don't charge Canadian sales tax. So in this case, we can look at that and instantly go, no, that's probably quite right. You can also go into the contact here if you need to, or click through to the invoice and see if there's anything attached, okay, and that will help you verify whether or not it was reasonable, that would not have sales tax contained in it. We won't stick on that for too long. Or we can go into the contact itself, and one of the things we can do for contacts, if we know there's no tax, is we can actually set the default purchases tax. Tax exempt, I believe. There it is there. Okay, and we can save that, and I wonder if we save that, whether it'll show up now, because now we've told it what to actually expect for this supplier. No, it's still showing up. That's fine. So yeah, just keep that in mind that you know, there are lots of transactions that are showing up here that are legitimate. There's nothing wrong with them. We would probably, you know, want to just look at them and go, yep, not a problem. So I'll just run through them real quick. Technology marketing toolkit, and a lot of these, you know, you won't know till you get to know the clients. That's an American outfit, not charging tax. Google AdWords doesn't charge Canadian tax, even though they should. Same with Facebook. So we've got all those in at no tax, but our advertising and marketing code assumes local tax. Books and resources, probably going to be the same thing. Most books in Canada are 5% GST. All other resources are going to be 13% GST. That makes this account a little problematic because there's no one right answer for a local transaction. In this case, they've all come through at zero. We have Amazon, which we are going to assume is the American version, and Audible, and therefore they've been flagged as potential tax violations. They're going to be okay because neither of those are charging GST for the most part. Then we have another clause here that says high. Now, what Xero is doing here is it's simply looking to see, is this transaction significantly above or significantly below our average transaction value in this account? So in this case, we don't normally charge more than $100 or so to the books and resources code. So it's actually flagging this transaction as potentially high value. And again, it's just a quick reasonableness test. You might want to drill into the transaction and look to make sure that everything's been entered correctly, and that no typos have been made, no typing errors or allocation errors. You know, it's trying to tell us, hey, maybe you shouldn't, maybe you put this to the wrong account, maybe you've used the wrong amount, etc. But here we can actually look and see the transaction as it came through Receipt Bank, and we'll be able to break it down and see, yep, well, these are actually the right amounts. We can be happy that we've got those amounts and that's what's been recorded in Xero, 226.83 plus 11.35 of taxes. Okay, now one thing that the Receipt Bank does, in many cases, it's going to split the transaction into the taxable amount and the non-taxable amount. So again, sometimes things are going to show up as not taxable when in fact were. You won't know that till you jump through the transactions to look at the breakdown, and you can see, that's a typical Receipt Bank layout where it's just posted through the tax-exempt portion and the taxable portion, really for the purpose of getting this number to be correct. Okay, we're going to keep scrolling through this really fast. Again, the rest of these are all tax questions. As I run through them, I'm looking Humberstone landfill. That's likely to be a local transaction, but that's likely to be probably a municipal service, like a local government service, and local government services or federal government services don't have GST, so therefore that's probably quite valid. That would have no tax. It's also a small amount, so we're not going to get too worried about it. I'm going to keep looking down. I'm not going to look into every single one of these. All of these utilities, there's no GST. I'm pretty sure there's no GST on that. Again, for really good clients, they're going to be attaching documents. If they haven't attached documents, then you might want to consider adding that to the list. Now, this is not a good example of an appropriate bill because it doesn't break out the GST amount. So there may actually be GST on this number, but this document isn't enough for us to be able to get it. We need to actually get the PDF version of the bill. So Hannah should have actually rejected that and asked for or waited for the real PDF to come through. That's a shame. It may have actually come through more than once. Let's have a look to see what's gone through. $79 on the 18th of October. And oh, look, we have a bill awaiting payment also for the 18th of October. So here we've actually picked up a double entry. No, which one's which? So that one's the one awaiting payment. Let's go back one screen. Oh, that's above the fold. Okay, it's actually the same transaction. That's why it's showing up twice. These ones are all activity. That's just open items. Okay, we're going to just keep rolling on. Meals and entertainment. It's picking up a whole bunch of tax questions. We haven't claimed the GST. Now, this is again not unusual for entertainment, especially if they've gone through Receipt Bank, because Receipt Bank's going to split them into two lines. The line where it calculates the tax portion, and then the amount that's implied to be non-tax. So these could quite easily be non-taxed sections rather than the whole amount. If you want to, you can take a couple and look at them. Now, again, if we haven't got a receipt for it, we're generally not going to be claiming the tax anyway. So there's no receipt attached here, especially on a client where we're doing the bookkeeping. If a client's doing their own bookkeeping, a little bit harder to tell because they may not be attaching documents. It gets harder to look for verification, and so you might want to just have a few general questions. For example, hey, I notice you're not claiming the GST on a lot of your meals and entertainment. We recommend that you enter in the correct amount of GST that's been paid, or something along those lines. So again, just looking through here, most of these are going to be tax issues. This particular customer client has a lot of US-based transactions on his credit cards, so obviously they become harder. Z Minimart's a local transaction, but obviously he hasn't given us a receipt. It's over $30. That's the Canadian GST threshold, before we should have a receipt, although we let the client tell us how sensitive they want to be. But we get conservative, so we might not have claimed GST on that, even though we possibly could have. And so as we go through, here's a high one, so that it's an income line. It's flagged as high. We generally don't get too concerned with high income because if it was too high, it would have shown up in receivables and be unpaid. So I'm not too worried about that one. Everything else is tax related. Just double checking everything in here. Looks all good. That's product rebates, so we tend not to have HST on those, etc. Rent. It's actually a bit strange. I think his landlord doesn't have rent. Now I wonder why. This is probably some kind of disbursement, 4863. Oh, that's water. Okay, so effectively they're paying a water charge. Water doesn't have any sales tax in it. Had it been some other things, then maybe it would have. And then sales revenue, again, 1 cent roundings, a debit value in a credit account. It's flagging as a potential problem. That's obviously small rounding issues. I'm not worried about that. Okay, so that's reviewing general ledger expenses. So that brings us to the end of the reconciliation reports section. And that's really just sort of doing a general level transactional overview to make sure that things are reasonable in the ledger. Next thing we're going to look at is actually the draft management accounts and the reviews we do in there. Now, the best way to do this is you actually want to take the draft management accounts or take the accounts and roll them forward. Best way to do that is to look for the one that we published last. So best place to find that is under published reports. Here you can see we have a management report for 31st of August. Obviously, forgot to do one for September. But if you open up the last one and click copy and edit, now you can change the date to bring it forward to, in this case, October 2017. Now there are two versions. There's the more recent version and the old style. This is actually the old style. So don't get too hung up about that, but just know that this might look slightly different when you're looking at one that's using the more recent styles. If I'm using the old styles, then in time we'll convert them all over. But for a while there, we couldn't get the same type of data in the new styles as we could in the old styles. That's why some are still using the old styles. Recommend that once you've done that, you quickly save as draft, just so that if anything crashes up on you, you can still get back to it fairly easily. So we're going to go back into this report. So now that we've got the current report ready, now we're going to do some reviews. We always start by looking at the balance sheet. Now, problems hide on the balance sheet. So on the balance sheet, you are looking for negative balances where there shouldn't be negative balances. So negative balances in the bank accounts, that's pretty normal if you have a credit card or an overdue overdraft account. Negative balances in fixed assets and the accumulated depreciation. Again, that's very normal. Nothing jumps out at us here. What we're looking for is negative balances in the other assets or negative balances in the liabilities section. We would want to look at that and go, this looks a little strange. We've got some rounding here, 4 cents. That's pretty normal. We've got some suspense that's been going on for 6 months. That's something that needs to be investigated. We've got a negative shareholders loan account, which means it's overdrawn. Again, that's not actually unusual because we haven't allocated his year-end salary yet. So again, shareholders' current account in and of itself is not a problem. If that's more than his retained earnings up to his last period, then we will have a problem. But for now, that's likely to be okay. That comes into the tax type of status. So just looking at his balance sheet, we don't have any unexpected or unusual negative balances except for suspense. Then we're going to look next at the clearing accounts that are carrying a balance. So suspense is a clearing account that's carrying a balance. So the fact that we have around here for 6 months, this 94.18, suggests there's something that needs to be followed up. So here we might want to go in and find out what's caused this 94.18. You can see it was still here at the start of September 2017. So let's go back a year and just see if we can find out what caused that $94. So those offset, those offset. So it's these three here. And he says it was PayPal fraudulent charges that we put to suspense in May. So again, this is something I'd add to the list of questions to see if he's got an answer on those. We can't leave them in suspense forever. We're going to need to clear them out. There was financial year-end stuff probably if they haven't been paid back since. And so we might want to just ask him if he remembers if they ever got resolved. Okay. We're looking also in here for some payroll clearing accounts. Now, he doesn't seem to have payroll clearing accounts, which is fine. But in payroll clearing accounts, we're looking to see if that amount is starting to balloon out of control. What tends to happen is that items get posted to payroll clearing or employee or taxes clearing, and then they just sit there. And when the actual transaction happens, it gets recoded, directly as a spend money. So we want to be looking for those kinds of balances that we expect to be able to, we should see some subtle variations month by month. They shouldn't be growing significantly unless he's growing staff. And generally speaking, they should effectively be cleared out every month and new transactions coming in. We shouldn't see us holding a balance in the payroll clearing account or the taxes clearing account because they really should be settled out, pretty much every month. So when you start to see those, you want to look into them and make sure they look fairly current. If they're not perfectly balanced, it's not the end of the world. They will get balanced as part of a year-end exercise. If you can balance it now, if you can see a problem and fix it or ask a question, go ahead. It keeps things clean. But they do get attention at year-end as well. We're just looking for new issues when we're reviewing them now. So it looks like right now everything's looking pretty clean and tidy, which is what I'd expect for this client because we do the day-to-day bookkeeping. So I'd probably raise the suspense item. I know it's been raised before with them. We haven't got an answer. So we probably want to raise that again so we can get that cleared up. Okay, next we're going to look at the income statement or the profit and loss report. And again, what we're looking for here are negative items where there shouldn't be negative items. You're looking probably at the current month as well as year to date. You're also looking for things that look all of a sudden out of whack. So if sales all of a sudden drop down to nothing, or a very low number, or something is really big. If there are some numbers where payroll was running along at a particular amount, let's say that's insurance, and then all of a sudden it spikes up to $10,000. You might want to look at that, look into those transactions by clicking on this link here, open a new tab, so that you can find, that's funny, what's in these numbers? Oh, looks like we may have miscoded something. So what we're looking for when we're looking at the P&L is we're looking for general coding reliability. We're not worried if they make small mistakes, unless those small mistakes would change our tax situation. So obviously some of the tax-related accounts we do care about. So meals and entertainment, he shouldn't be putting stuff into travel, should be into meals and entertainment if it's food related. If it's non-deductible expenses, it needs to go into non-deductible, it shouldn't go into somewhere else. If it's donations, then obviously that has certain tax issues. So we want to make sure that they're not getting hidden somewhere else. They go into the donations code. So those are the only things I'm overly worried about when I'm reviewing account coding. I'm not going to get too fussed if things aren't perfectly coded. However, if we can get things consistent, we should. But I wouldn't spend a lot of time. Perfection is not our goal. We're looking for good, high-quality accounts, but not perfect accounts. Okay, so I'm looking through here. I'm looking at his expenses month over month. His expenses this month are pretty consistent with the last month. That's looking pretty good. His cost of sales number. Now, his cost of sales number, we're not optimizing for inventory purchased at the moment, so that is looking high. He's got 85 grand worth of income, 27 grand worth of cost of sales. Most of that's probably going to be the sales revenue and the purchases, those two lines that go together. So you can see here that should be about 2/3. Every now and then it's out of whack, like that one there. This one's looking a little high. So again, maybe he's got some items that we coded here that he's using in his business and therefore shouldn't be purchases. That's very likely what's happened back here in August. He just hasn't broken it down for us yet to tell us, oh, these assets aren't, these purchases are assets, not resale items. Okay, which is something that we're working with him on at the moment. So again, you're just looking for reasonableness here. You're looking at what jumps out at me. Negative items are always an area where you might want to just look into to get some more information. Okay, that is the sort of stuff you're looking for on the income statement. Next, you want to look at the last report or the last communication with the client. So if we sent the client a list of questions for the last report, and on some versions of our report, we have a front page that does have a space for open issues. And we want to make sure that we're actually resolving our open issues rather than just sending them off and forgetting about them. So before we finalize this report, we always want to ask, for follow-up on the last items. If they don't appear to have been actioned, my recommendation is to hold off any further work on the new report and send an email back to the client. In this case, his name is Brian. We'll say, hey, Brian, I have this list of open items from last month. I don't see a response or any action on them. Could we please have a phone call to discuss? Or could you please give me an update on these issues? I'd like to resolve them before I finalize the new report. Okay, I don't like items that getting stale and sitting around for a long time, and unfortunately Brian can be a little bit slow on some of those smaller issues. So you always want to try and wrap up last month's issues before we finalize this month's issues. Assuming that's been done, maybe there's one or two items that were left over. You go, that's fine, I'm just going to roll them onto my next list. Now you're going to have a list of open questions. Now at this point we have to decide, are we going to hold while we research some of these issues, or are we simply going to finalize the report and send them off a list of questions? Now if you think it's better to hold because some of those issues seem fairly significant, then that's fine. You will want to make sure that you have sent that list of questions to the client and made a diary note to come back in a few days, see if he's answered. If necessary, send the reports off. It might be that we send the reports off and then we have to come back and edit them afterwards because he's given us answers, and that changes the presentations, which is also fine. So again, that's going to have to be sort of a case-by-case decision. But the key thing is here, we do want to try and resolve last month's issues before we start to send out a list of new items. We want to have an estimate of tax, which I'm going to cover in a separate video completely. Assuming that this is all good and we're happy that everything is good in these reports, we would now come down and publish the reports. Now, I do recommend you go and look at every single page that's here. We do have age receivables and age payables. Again, just so that before it goes to the client, we're happy with everything that's in it. In this particular case, we give him a list of his drawing transactions, and when Xero prepares this report, even though we've copied and edited and changed the overall report date, this page doesn't update. So we're just going to have to give him the new month's worth of drawing transactions. And we just send this to him so he can actually see what he really is drawing out of the business in addition to his salary. So he's actually drawing out, $4,000 in this 1 month alone in addition to his salary. So we want to see that he is aware of how much he's actually drawing out of the business. Okay, and if this was everything, we'd click Publish, and would now be able to send an email to the client, referring them back to this report, which is now going to be in published reports, and maybe asking him for the questions that we want to resolve before the next month.